Welcome to the Legacy Academy Bootcamp Day 12. And now we're finally going to be talking about strategy. How to build your strategy, how to apply your strategy, and how to manage your risk with your strategy. Of course, we already talked about a lot of things. You know what is the chart, you know your role as a trader, you know about the market participants. You built throughout these 2 weeks a very solid base that will allow you to put a strategy on top of it, because now you have an understanding, a good understanding about the market and your role as a trader. And from there, it's just going to be amazing because you'll be able to apply a strategy, a thoughtful strategy. You're going to be able to make moves with a reason, a logical reason. You're going to be able to think rationally and take action within the market. And you'll be able to, if you have losses, if you have wins, manage your biases, manage your risk, manage your capital, manage your trades, and take the right action. All right. So we still have a lot to cover. We still have about 18, 17 days, right? And we're going to be talking about building the strategy, applying the strategy, and finally, the type of traders, your personality, how to manage your capital, how to manage your risk, how to manage your trades, and take the right actions, rational actions. But there are some things that you need to know regarding the strategy. So before building a strategy, you need to know some things that are important and that will allow you to take all the pieces of the puzzle and put them together and have a full story, a reasonable story, a rational and logical story that will allow you to take action and take advantage of the price dynamic in the market. So by now you know that, okay, if I'm trading Euro USD, I know that this is an asset, and no matter what the asset is priced, there are participants within that market that are interested in that asset and that are looking for a particular price, a fair value, or call it a consensus price between buyers and sellers or between market participants, and we talked about them. And there's a whole dynamic that is making the price fluctuate, and your role as a trader is to basically take advantage of any volatility within that market, be an intermediary, buy, make a profit out of it, sell, make a profit out of it. So when you know what is the fair value and what is the trend, so when you combine fundamental analysis to technical analysis, boom, you have an amazing um, mix of knowledge that will allow you to put all the pieces together and take advantage of the market. Right? Okay. Now, we're going to be diving into strategy building tomorrow. We already talked about our edge. We'll talk about it more. We'll practice it more. We'll read the market more. And we will be able to finally, um, build our strategy and apply it together. And the last episode of that 30-day series is basically going to be us trading together. So I'm going to record myself trading London session or New York session and showing exactly to the people how I trade my setup or my edge. Now, what you need to know before building a strategy is that all strategies have the same baseline. What do I mean by that? Most of the people on the internet will talk to you about their particular strategy that they apply in a particular way and they make money out of it, or they are probably lying about it. And even if they're right, the whole baseline of from where they apply their strategy is wrong, or they're very bad educators. That's also an option. But what I want you to understand is that as soon as you understand the dynamic of the price, the reason of the price movements, the reason why there is sometimes volatility, there is sometimes no volatility, the reason why market participants might make the price move in a very volatile way, or you'll see a range sometimes you'll see a trend. All this has a reason. If you understand the reason, if you understand the whole logical process behind it, if you understand why the price is moving and when the price is moving, then your strategy will make sense. If I label things and tell you about patterns and head and shoulders and um, or even candles or that dinosaur pattern that people start inventing, and you know, people make fun of patterns. People start inventing patterns not because they think it's right, because they make fun of it and because it's funny. You might, okay, you might be new in trading. Find some kind of educator that's talking about a pattern, that is talking about, hey, when you see that pattern, you sell or you buy, and boom, you make money. That's wrong. Why? Because you don't understand what is the real reason of that pattern happening. If, for example, I see a head and shoulder, what's a head and shoulder pattern? You see a high, the price pulling back, another high, a higher high, the price pulling back to the same pullback level, the same low level of before. You see the price having a high, but not a higher high, a lower high, and then the price dropping, right? That's a head and shoulder patterns in a simplified way. Now, I'm never gonna call that a head and shoulders pattern. I'm just gonna look at the price action and I'm gonna be like, oh, that movement is odd. That's weird. So I had, I basically had an uptrend, and I saw that last high, the highest high, couldn't continue that uptrend, so it pulled back really far. It tried to push higher but wasn't able to push higher and break to the downside. That's probably a reversal. If I have a confirmation, I'm gonna sell because I see that the price lost momentum and the price started to reverse into the other side. And I'm gonna look at my levels of price and see if I can have a good entry, if I can put my stop loss above these levels if they keep getting rejected to the downside, way above these levels, and see where I can have my take profit, a safe take profit, level 1, level 2, level 3, right? So I'm gonna think about a pattern more like the action of the price. What is the price doing? What are market participants doing to push the price either up or down? What are the fundamentals saying about that asset? What are the people thinking about that asset? Okay, so I'm going to combine fundamental analysis to technical analysis and understand the price action and where I can jump in a safe way and be out of the trade in a safe way. And if I have to scale up, I'll scale up. If I have to scale down, scale down, right? So it's not about patterns. It's about whether you understand the market or not, whether you understand the logic behind the price dynamic, the price movement, the price action. Understood? So you need to know again that all strategies are all based on supply and demand. It's basic economics, okay? It's all based on supply and demand. Now it becomes complicated because each asset has different things embedded in their prices. And you need to know what's embedded in that price for you to understand, okay, there's a fundamental analysis that you need to make, there are numbers that you need to read, there is a fair value that you need to like analyze and understand and calculate and know where it is. And then there's a technical analysis, technical side of it that you need to combine with the fundamental analysis. If you can align them, that's amazing. But at least to know where the price is heading in that horizon you're trading, in that duration you're trading, right? So that would make more sense to you if I talk about it like that. And it made more sense to me when I realized it. Patterns Labels don't go there. So when I'm going to talk to you about my strategy, when we're going to work on our strategy, the strategy is basically to have no particularly fixed strategy. Because if anybody else gives you a strategy based on patterns, you can only do this pattern, 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 right? But if I give you an understanding of the price action and tell you, hey, don't look at it, don't label it, don't label the move, don't label the pattern, right? Understand what's going on with the price. Then your strategy becomes adaptive. You can adapt your strategy to what's going on in the market and understand where the price is heading, right? So if something seems odd, you understand why something seems odd. People say, oh, if you cannot apply my strategy, it's a problem of psychology. No. These people are the problem. These people don't understand. These people don't know what they're talking about. It's not a problem of strategy if you don't understand why a pattern works or not. It's a problem of knowledge. Because if I give you knowledge about the price dynamic and the price movement and why the price is moving, then you'll be able to read the chart and understand why this price movement seems odd sometimes, why you would decide to not trade at some point, and why you would decide to trade sometimes, and why you would decide to scale up some other times, because you understand the price action. Okay, this is very important. So when you open your chart and you see all these candles moving, you're not labeling patterns and confusing patterns with others and confusing good patterns, A plus setups, with Z setups, with shit setups. Because that's what we all did at the beginning, right? You want to understand the price movement, what's embedded in the price. You should know how to calculate the fair value of an asset. You should know how to analyze the sentiment of that market. You should know how to combine fundamental analysis with technical analysis together. That's the baseline of a strategy. The baseline of a strategy is your understanding of the market. And once you understand the market, you can apply your strategy very easily, very simply, and with certainty. You'll be confident in applying your strategy. Because, now you understand what you're doing, right? So that's very important. So don't label things, don't try to label things, don't think about labeling things, because I'm totally against it. We're gonna read the chart without indicators for now. We already did it basically during our 12 days before this video. So we still have 18 days to go or 17 days to go. We'll talk about some indicators that are important and that will help you in analyzing the price and understanding the price. We'll dive into logical thinking in trading. We'll dive into risk management and how to manage your risk, and understand that the second point and the last point that I want to make is going to be management. So I'm talking capital management. When you have a capital, you don't need to burn it all out and blow it all before understanding that, hey, you need to go slow and manage your capital to not blow it all up, and go slow to learn in the long term and then increase your capital. It's not about making money. It's about being able to trade tomorrow. That's important. Trading is not about making money. Trading is about to be able to trade tomorrow. So you don't blow your whole account and just stay there thinking, oh, where am I get the money from now so I can keep trading? No. You should limit your downside at all costs. So capital management. Then the baseline, this is all under management, right? Capital management, risk management, and risk management is going to be, okay, I have a risk. I'm taking the risk. I have multiple setups. This is more risky than the other trade. the other trade is less risky than that one trade that I took. Sometimes I'm gonna risk 1%, sometimes I'm gonna risk 0.5%. Look, don't try to chase the profits. Let them come, but play the game with the rules. You need to play the game with the rules. You need to understand that some part of the game is all about risk management, and your strategy, once you understand the deep meaning behind it, behind the chart, and you have a strong strategy and you build your skills and knowledge, then it's all left to risk management. You cannot have 100% success rate. You cannot have a 100% win rate. You can have a good percentage of win rate. 100% is, hard to get. However, with a good risk management, you'll make money. That's all you need to focus on. It's delayed feedback. So don't freak out when you have a loss. Don't be too confident when you have a win. The strategy is all based on risk management and delayed feedback. So, as a recap, you understand the price dynamic and you don't label things. That's very important for the next part of our bootcamp. You understand that it's delayed feedback and all about risk management. Very important for your biases and what you think. Okay? Forget what you think. Focus on what has meaning. And finally, biases, you need to all put them away. Forget everything. Just focus on what you should do right. And what you should do is focus on the right thing long enough consistently until you make money, right? So I'm gonna see you tomorrow anyways. So once the video is gonna be online, just check it. And now we're gonna talk about serious things. Now we're gonna be serious about it, right? So I'll see you tomorrow. Well, happy to help anyone, and I hope that helps a lot people, erasing all these misconceptions that they have and assumptions they have about trading. And there's a lot of noise, so my mission is to basically remove all that noise for you. If you didn't do it yet, join our Discord, check our website, and see what I can provide to you. And if you're actually serious about it, well, you're very welcome in the family, very welcome in the team, right? So see you tomorrow.